Is real estate market in Canada going to slow down? Is it going to be burst? Or is it going to be a minor correction going forward? Lots of questions in people's mind, and I'm going to cover in this video exactly that, what the trend that we are seeing in the market, what is going to happen potentially when we go into the summer market, and what are the possible implications as a result of geopolitical tension that we are seeing in Europe, and then overall economic impact that is going to have effects in terms of the capital flow in the market. So without further ado, let's dive in. If you're new to my channel, my name is Yasin, and I make these videos to educate my audience about Canadian real estate market, general investing strategies, macroeconomics, finance, as well as technical sales. So if you're interested in any of these topics, feel free to subscribe and don't forget to share this with your friends. So back to today's topic. So the real estate market in Canada is shifting a little bit. We have seen a massive bull run from December onwards to February, and a lot of realtors, even myself, think that February was the peak of that bull market, right? So we saw a massive bull run in the last 3 months where the market was absolutely insane. Every property is getting 20, 30 offers. The property was being sold within days, even less than a week, since it is listed on MLS. So massive bull run, so many overbidding. The price growth that we have seen is basically unsustainable, because whenever you see, regardless of any asset class, whenever you see a massive bull run, it is going to be a temporary spike, because you cannot have a vertical spike all the time, right? It goes up and then a little bit pulls down, and then goes up and pulls down, and then try to maintain its momentum a little bit. But of course, there are so many factors behind the scene that is going to impact this market move and the price action. I think one of the factor is the number of inventories. We saw a spike of inventory right in the last month of February. It spiked back down because we were going into the March break holiday. But as the inventory goes up after the March break, we're expecting a lot of inventory to come in into the market. This will potentially give a lot of options to the buyer, that they should not just go crazy on any property, because they will have lots more options available in the market. So if you look at the February statistics from TRAP, you can see the listings, because the listings were so low, the amount of transactions were dropped, from compared to last year. But if you look at the average selling price, $1.3 million of a single family home, average home price in GTA, which is the highest we have seen in the history. And if you compare it month over month, it is still climbing up 1.3% compared to January. So consistently we have seen the 30% average year-over-year price growth in the last 2 years. When you see this kind of a price action, you cannot imagine that this is going to stay forever, right? These kind of price actions, whenever they have, it is always short-lived. It comes back down and then try to come back again, and goes down and try to keep its momentum going forward. We can see the listings are kind of dropping compared to last year, right? This is the listing comparison. SLNR, which is sales to new listing ratio, which means how quickly the listings are being absorbed, which is there were not many options available in the market, and people were just jumping on whatever is available. And if you look at the condo statistics, you can see condos are not falling behind. Transaction has gone up 20%, and the average selling price for a condo in GTA is $710,000, 16.4% increase. Remember, at the beginning of pandemic, condos had a very bad market. Nobody was buying condo. There was a plethora of the listings popped up in the market across the board, and which put extra downward pressure on the pricing on the condo. But since last year, 2021, we saw condo market started picking up, and now we're seeing the similar price action in the condo market segment since in the last 6 or 7 months. Rental statistics, the number of rental transactions has dropped again because of the low inventory, but the average rent has gone up 13.8%. The average rent for a 1-bedroom condo in GTA is right now over $2,000 a month. If you see the 13.8% rental increase in condo, and you compare this with the inflation metric that government published, CPI, according to that government published number, the shelter price has only gone up 6.2%. Now you can see this CPI metric is BS. Like, how come the shelter inflation is only 6.2%, where you see GTA rental market has gone up over 13% year over year? So you can see these statistics are very misleading, even though they are comparing the national shelter price growth. But even then, you can see in other markets, the rents have gone up significantly. So it's not just about GTA. If you look around in the suburbs of GTA, like Niagara region or Kitchener-Waterloo, the rents have gone up significantly compared to last year. One of the indication is when you see a lot of listings are being relisted on MLS and with the price change. That is one of the indications where we see that the seller is not even getting offers, or they're getting some bully offers which is not up to their expected price. We are seeing a lot of this happening right now in the system. So when you run a report on your MLS, if you're an agent, there's a lot of listings that are being relisted with some price correction. Initially they put the price higher, they're now reducing the price, or they put the price much lower and now they're increasing the price. These are the strategies a lot of agents typically follow to get enough showings. If not, then they try to readjust the price to change the strategy. So when you see a lot of these things are happening, it's one of the indications. I'm not saying this is the only indication. This is one of the indications where you see the market is shifting. The buyer sentiment is kind of shifting because maybe their priorities are shifting because of the interest rate hikes, even though the interest rate hike will not have any material effect right now, but it will have a symbolic or a psychological effect definitely amongst the buyers. So things are changing. And I think when we see more listings going forward, then of course we will see a lot coming to the surface. You see, these changes takes time to be more visible across the board, but at the ground level, this is what we are observing right now. So where are we going with this market? I think a lot of people are speculating. Again, people are confused and afraid what's going to happen. But I think whenever you see a massive bull run, it is always normal to see a pullback right after that. But that should not mean the market is going to crash, because there is still enough demand in the market to drive the price action upward. But of course, the massive bull run, the massive price action is going to slow down for sure, because the inventory is going to come up as we go into the spring market and in the summer market finally, with new immigrants plus the people coming in from Ukraine also going to put some pressure upward in the market. So that will going to increase the demand a little bit. I think more importantly, we have to see how the Bank of Canada is going to continue their rate hikes going forward, because the market moves with capital. Okay, I want to make it very simple. The market moves with the capital flow. When you have, in the last 2 years, when you had excess amount of capital available in the market to drive the asset purchase prices like real estate, like cryptocurrencies and stock market, we have seen bull run across the board, right? Now that capital is being sucked back out, because the Bank of Canada is going to make interest rate even more expensive going forward, because the inflation is running so hard. So the immediate action you will see from the Bank of Canada is to increase the interest rate to try to control the inflation a little bit, even though majority of the inflation reasons are the outside geopolitical considerations, but it is also related to the amount of liquidity that was injected in the market. So definitely the rates are going to go up. Bank of Canada also said they are going to announce QT, an opposite process of QE. So in QE, they were buying government bonds, loaning government new money to spend in the economy, which is why we saw a massive flow of capital in the economy. Now, if they start doing QT, that means it's an opposite. That means they will sell those bonds into the market, extract the dollars circulating in the economy out of the economy, which will also reduce the amount of money being available to be spent. So if that happens, then of course money becomes expensive, money becomes scarce, and that will have another downward pressure with regards to the purchasing power, because when you don't have enough money to spend, when the money becomes expensive, then you see everybody start cutting down on their extra spending, whether this is household or corporations. Equally, you will see a trend in terms of lower spending going forward. So a lot of factors out in the play, not only the rates, geopolitical situation, the new immigrants, as well as the inventory level. Overall, I think market moves with capital. If there is not enough capital in the market, then of course we will see less price action growth across the sector, not just real estate, but also stocks, crypto market, as well as the commodities as well. So that's all I have for this week. If you like it, give me a thumbs up and hit subscribe, and put your comments down below. What do you see? What do you think is going to happen in the market? What are you seeing in reality across on the street if you are dealing in the real estate today? Happy to hear from your perspective as well. So let me know what you think, and I'll see you in a minute.